Welcome to the penultimate month of 2016. This year is flashing by. So October done, obviously. First of all, I need to, before we get into the minor stuff of what's moving markets and that kind of thing, much more importantly, I need to concede defeat. So this guy who you can see, I think, on the screenshot over here, is gloating this morning, having 1 hour bet, and I bet that the S&P 500 would be trading below 2110 at the European close on the 31st of October. Fail. I tried to get some tweets off just before the close yesterday that Clinton has been arrested, although those tweets fell on deaf ears, and in the end I wasn't able to get it down there. So unfortunately I owe Vass some a liquid reward. So equities are on the up this morning. I'm going to talk about that in a bit. We've had data out of China and some other stuff, but let's just talk about sterling first. And obviously a nice punch higher this morning and a really nice reversal in yesterday's session. So if you look at my screenshot 1 hour chart here, and it was a really slow day yesterday for currencies. We'll get onto oil in a minute, which certainly was the biggest mover of the day, but actually cable then sprung into life towards the end of the session. It was just drifting and drifting lower, similar to kind of euro dollar, but in the end we got this boost, and this has been added to this morning, and actually cable briefly hitting R1. That's the top so far today, not quite making it to 123 on the futures, but just briefly getting up through that high we had on the 27th. So, and to put it in perspective, like on a daily chart, we're still obviously right down here at the bottom. If I was just to zoom in slightly, so this chart's a bit messy with the pivots here on it, but let me just move that line. I guess the key price point on the upside would, to start with, is going to be 123.47 on the futures. That's the kind of the high of this consolidation range after the flash crash 7th of October surge to the downside. Ever since then we've been flat, with that being the top. 123.47, look out for that price if this upside's to be sustained. Now, why has this happened? Well, the power of one man, Mark Carney here, so delivering the news that he's not resigning, first of all, and he's going to stay until June 2019 as the Governor of the Bank of England. There was some speculation he was due to finish his 5-year term next year. Or was it 2018? It's 2018 was his he had a 5-year contract. Joined in 2013, 5 years. 2018 was his official end date. There have been rumours he was going to resign imminently, not complete his 5 years. Normally, Bank of England governors have an 8-year term, but he's decided to actually deliver news that absolutely nobody predicted, which was he's not going to do 8 years, and he's not resigning now, and he's not doing his 5-year term either. He's decided to do 6 years, so he's going to leave June 2019. The point being that he's going to steer the ship through to the post-Brexit era, obviously the current timeline, and we'll see, it might not happen. Obviously Theresa May wants to trigger this Article 50 by the end of March next year. She might not be able to. We're going to have to wait and hear from the Supreme Court on their ruling as to whether it's legal for her to do it without a parliamentary vote. The Irish voted on this last week, of course, and said it was legal for her to just get on and do it without a parliamentary vote. So, but we haven't heard from the kind of UK Supreme Court yet. But assuming she is able to do that, the timeline is we exit March 2019 and Carney exits 3 months later. All right, so this has been seen. Let me just switch back to the charts. A little bit of relief on this when you're looking at UK assets with regards to sterling punching to the upside. As I said, that this is really more about the uncertainty is removed. Obviously you want consistency. As I was talking about yesterday, Carney is considered to be one of the kind of global premier central bankers, and so we want consistency. We want stability in the central bank as we go through this wild roller coaster ride that's in front of us. We want one kind of firm anchor point, and so he is that. So this is why the pound has appreciated off the back of this. We've certainly had movement elsewhere. UK bond yields are on the up. You've actually seen equities move lower. That's because of pound strength. There's been a clear inverse correlation between the pound's value and UK equities, well, the FTSE 100 especially, but actually the FTSE 250 is down today. We've got some earnings in the mix as well, and the mix is the right word because you've got some conflicting news flow here on this. On the bad side, Weir Group, which is a FTSE 250 stock, is under a huge amount of pressure this morning, down well over 5% off the back of some bad earnings, and that's dragged they're warning on lower profits, and that's dragged the FTSE 250 lower, along with a bit of sterling strength, of course. But you've had on the flip side of that, Shell have come in with pretty decent numbers, despite the fact that obviously the price of oil yesterday plummeted. But obviously we're talking about Q3 here, and Shell delivered good numbers. They're up 3.3%. But so Carney and some earnings here kind of in the mix, influencing UK denominated assets this morning. Let's look at global markets, and let's bring in the DAX on my screenshot on the left. We did have a little pop higher. I've got a 1 hour chart here. We hit resistance, which is the 27th of October. 27th, what was that? That was Thursday, wasn't it? It's Thursday's high from last week has capped the upside. For now, we gapped open. If I just go to like a 5-minute chart, you'll see the kind of gap we had here at the open that then all got given back, and at the moment we're finding support on yesterday's high. So gap open, and the gap open was perhaps about, well, I don't know, maybe Carney minor contributor to that, but it's definitely more about data flow coming out of China. So, and it is the first of the month, and as you should all know by now, the first of the month is manufacturing day. This is where we get manufacturing PMIs from across the world. Obviously Asia delivering theirs first, then Europe, then the US. So overnight we got numbers out of China which were much better than expected. They kind of have two manufacturing readings. The more official manufacturing PMI number was 51.2, which was better than the expected 50.4. They have a separate kind of reading, more for kind of medium and small manufacturers, or less of the state-owned stuff, and that came in nice and healthy as well at 51.2, both coming in line. Let me show you a chart here, because this is quite significant. Here's a chart of these two manufacturing prints from China, and as you can see, both pushing higher, and actually these are the highest numbers we've seen for 26 months. And given how important manufacturing and exporting is still for China, strong manufacturing data is definitely something to take note of. So this is definitely a promising development. All that hard landing risk we had, back at the start of the year, all that kind of story has been out of the press for months and months, of course, but actually really now we're actually starting to get some real positives. The thing about this is the Chinese government might use this strength to perhaps squeeze through some tightening policy, especially on the housing market. But if we scroll, I think I had another chart. No, I can't find it now. Anyway, the services sector data was also solid. Anyway, so the manufacturing data from China. Look at the DAX though. I'm just going to switch back to my chart because all of this movement to the upside, this gap open at the start of the session, is all being given back now. So just literally as I've been speaking in the last 2 minutes, the DAX has now broken yesterday's high, and we squeezed right back down. In fact, we're below yesterday's close now, and we're right back into the mix That is the kind of range we had for most of yesterday's session. If we step back to a 1 hour chart, then you can see we're right back into the middle of this chop zone that we had at the back end of last week and throughout yesterday. So brief bit of positivity here, perhaps mainly as a result of this China news, is already being reversed. Okay, what else then? Let's have a look at, given, this DAX is just picking up a bit of momentum here. Just on the downside, we're down through the pivot level now, and actually S1, but perhaps more importantly, you got a price point coming in, well, certainly more importantly, is the low that we had on Wednesday last week. And in fact, it wasn't last week's low. We briefly broke it Friday morning, but Wednesday's low at 10,625 on the futures. Briefly broke it Friday morning, and then that's been really key support ever since Friday evening, and then it was yesterday's low as well. 10,625 on the downside of support here, as this initial positive sentiment's just kind of getting reversed. Let's just, as this is playing out, let's just have a look. It's the obviously we've come to the end of a month, and so here we can just have a look broadly at how assets have performed. Deutsche Bank do this. They produce a chart just comparing different global assets. I've got this in dollar terms, this chart, so everything's been converted into US dollars, which is why on the right hand side it's obviously packed full of UK denominated assets. And why is that? Well, sterling collapsed 7th of October, remember, the flash crash day. So for October, sterling had another big step to the downside, and therefore when you convert sterling denominated assets into dollars, we get less dollars, of course, because of the exchange rate. So you've got gilts, UK government bonds, the worst performing asset of the whole lot here in dollar terms, and you've got the pound and you've got the FTSE 100 all packed in over here on the right hand side. Notably, you've got bonds in here as well, so BTPs, Italian long-term bonds, you've got the Bund, and with gilts as well. So you can certainly see that there was a big step higher in yields. We spoke about that last week. Big step higher in yields, especially on the long end. Oil, in terms of Brent here, where's WTI? I can't see it now, but anyway, silver and Brent down here on the right hand side. The best performers, Brazil. Wow. 13, well, hang on, let me see. There's another chart, not in local currency terms. Yeah, wow, that's. I was going to check to see if that was an exchange rate move. It's not. The Bovespa just exploding, 11% up on the month. That's the Brazilian stock market. Look at banks as well. This is all part of this gilt, well, not gilt, long duration bond yields climbing, steepening of the curve. Banks really benefiting from that, having a great October. Banks up nearly 9%. So. Yeah, pretty interesting to see some of these indexes in here. So that's that's October. That's done. Let's talk about oil, and I'm just going to firstly, let me switch back and bring up my oil chart. Definitely, perhaps the most interesting mover of the day yesterday. We've been talking, obviously, we've been talking about oil a lot. And I'm going to go to a daily continuation chart. We were talking about this again yesterday, but it's been a pretty, I would say, a pretty straightforward call with regards to the double top for the year. And then, I was looking for a break of 48.75. That was the mid-August high, and that was really, I was viewing that to be confirmation of the double top, and that you'd then get an extension lower, and it certainly happened yesterday. We really fell out of bed. Big move to the downside on crude. A lot of this technical, it's just, as I said, that technical break really just confirming really what everybody knows. Deep down, there ain't going to be an OPEC production cut. Let me show you on the screenshot here what's been going on, and Goldman's have now joined the Amplify trading call. So Goldman's making a call 4 days after Amplify trading, which is normally the case. They normally tend to copy Amplify calls. And here they are this morning saying, or actually yesterday I should say, 31st of October, saying that oil is now heading towards $40 and the OPEC deal is failing. On this chart here, we've got the price of oil first, with the blue line referenced on the left-hand y-axis, but the white line's in key. That's production. That's OPEC, total OPEC output. This is as of, actually that's quite old, isn't it? That's as of the 30th of September. And as you can see, it was still on the up. And given the fact that on the one hand, they're saying, yeah, we're going to cut production, don't worry, we're cutting it to 32.5 million barrels. And at exactly the same time, they're carrying on increasing production. Obviously, then we've had, really importantly, Iraq come out and say, we're not interested in cutting. We've had Russia say, we're not joining in with this OPEC idea. Obviously, we know what Iran think about cutting production. So really, what have you got left? And I mean, how are they going to get production from 33.75 million? How are they going to cut by 1 million barrels? And well, they're not going to be able to. When Iraq are the second biggest producer, there's no way Saudi are just going to put their hands up and say, you know what, don't worry guys, we got this. We'll cut 1 million barrels on our own. It's just not going to happen. So anyway, you're going to get a lot of oil speculation right up until the 30th of November OPEC meeting, all right? But as it stands for now, it certainly looks very unlikely you're going to get this deal. Therefore, the price of oil is on the way down. Obviously, there are some producers within OPEC that this is a nightmare for. They've been finally getting a bit of respite up at $50. But you know, the likes of Nigeria, the likes of Venezuela, for example, who have been hit hard as a result of this collapse in price over the last couple of years. So they're going to be feeling the pain. So anyway, look for, I don't know, now on the way down. I mean, 42.55 was the price point I earmarked. I know Goldman's are talking about $40, but I would say 42.55. I don't think we'll get to 40 personally. 42.55 was that mid-September low on the continuation chart. We might get down there. We'll see. But yeah, certainly a key break of that 48.75. Big unwind. All the energy stocks yesterday suffering. Okay, let's have a look at the data calendar for today. I said it's manufacturing day. So we've had China, obviously, overnight. We've got the UK. Actually, I don't know why we don't have Europe today, but I think they're delivering their numbers tomorrow. I think, not sure why they're a day late. But so we got next up really on the slate UK manufacturing PMI due at 9:30. 54.5 is expected, which would be a drop off from last month's 55.4. Here's the chart for the UK. It really was a powerful number for the month of September. All part of this story of a surprising resilient UK economy in the face of Brexit risk, but obviously it's all about the pound. So we are expecting a little bit of a drop off, but even if it is 54.5, even if it is 54.5, so a drop from last month's, that would still be the second highest reading of the year. So anything up around 54s, nice and strong. You're going to need to see a move below 52, I would say, to really start to maybe set the cat amongst the pigeons and really start to build a growing story of this honeymoon period, thanks to the cheap pound, is beginning to wane and inflation's coming and the UK economy is going to begin to suffer for it. If you get a number below 52, and obviously anything below 50 would be a shocker. So anything down there would very much support that theme. Anything above last month's 55.4 would be, we go to a 5-year chart, would be a new, because last month's was the highest reading we'd had since 2014. So anything above there, and we're setting new 2-year highs. Okay. Back to the calendar. That's really the main event for this morning, that UK manufacturing number. This afternoon we got a bit of Canadian GDP figures if you're interested. Actually, that's just for the month of August rather than quarter 3. But the big number certainly of the day is the ISM manufacturing number out of the US. This is coming at 2 p.m. We'll have a little bit of a warm-up on that with the PMI number at 145, but it's definitely the ISM number at 2 that's the key. We're looking for a slight improvement on last month, so 51.7. Here's the chart. We had that worrying, very worrying slide below 50 in August. Relief bounce for September, and we want to see that continue. Anything above 53.2 would be important. That would be a new high for the year. Okay, so that's for later on. The rest of this stuff not particularly important. We've got a busy day for earnings. There's no central bank speakers apart from Kuroda, who's already spoken. Japan keeping their policy, well, largely unchanged, I would say. This kind of Bank of Japan event has come and gone without any massive market effect. So no central bankers, but we do have a lot of earnings. We've got 41 S&P 500 companies reporting today. Pfizer, Kellogg being the kind of big two. We've already had some big hitters from the UK, Shell, BP, Weir Group having a bad set of numbers. So certainly earnings still in the mix. But let's see how we get on. I'm just going to finish by flicking back to the DAX chart, where we're still down on the bottom of that break back into yesterday's range, but still about, now that we're here, go to a 5-minute chart, it does look like we're just consolidating. Definitely a technical move back into yesterday's range there. That early positivity already given back. All right, that's it for now, guys. Enjoy the session.